The banana zone is what Julian and I have talked about as the acceleration phase that happens as they start rolling the debts. That's what creates the parabolic. Now, everybody misunderstands this or has a short memory. We said, and I remember it clearly because I came back from Zambia on safari, came back, did a video, Julian and I, banana zone starts now. That was August, September 2024. From then on, the market ripped higher and we chose various assets. We chose SUI, Solana, and we said these are going to outperform, and they did massively. Bear in mind that this is through to the end of the year. We actually think it extends into 2026, and that's going to be an important factor. And our view is Q2 almost certainly, but it could even be longer than that. We don't know. We have to assess as we go. So people say, you forecast this. What we're saying is, probabilistically speaking, with the data that we have today, it'll be this. It is extremely unlikely that it tops this year because ISM's just not there and global liquidity isn't either. And the structure of the debt cycle explains that. So hopefully we've got across that. Hopefully we've got across that recession fears are completely wrong. They're the wrong way around. People are looking at lagging stuff. That what we will see is a stronger business cycle, which will drive this. So take into account everything we know about debasement, that it is the massive macro factor, that it drives all assets, including the business cycle, that it's all related. So everything is correlated. So when you start to come that understanding, you start to think, what is the point of diversification?
Raoul Pal, renowned macroeconomic analyst and founder of Real Vision, believes the current Bitcoin bull market could last longer than expected. Rather than peaking in 2025, he anticipates an extension into 2026. Paul recently argued his case based on a combination of macroeconomic signals, liquidity trends, and Bitcoin's historical trends. Together, he argues these factors point to a prolonged cycle that could continue to propel digital assets far beyond traditional forecasts. Paul's perspective is primarily based on the ISM Manufacturing Index, a leading indicator of U.S. economic activity. He notes that the price of Bitcoin moves in sync with this index, rising during booms and during recessions when the ISM slows. Paul claims this alignment is no coincidence. The ISM reflects real economic demand and the health of the chain supply, while Bitcoin responds to the same forces as a store of value and hedge against inflation. Looking ahead, Paul predicts that the ISM will peak in the second quarter of 2026. If this plays out, he believes Bitcoin could follow the same trajectory, with prices potentially ranging between $250,000 and $350,000. According to Raoul Pal, this is when we will witness the next parabolic phase of Solana. Before we move forward, if you want to stay updated with the latest crypto events and news, you can subscribe to our channel and like this video. Now let's get back to Raoul Pal's view on Solana and the overall crypto market.
This is total internet users in millions from 1992 when there was first 5 million users of the internet, and crypto users 2016 when there were 5 million. Now we use wallets as active wallets as a proxy versus active IP addresses. Are they perfect? No. We all have lots of wallets. We all have lots of IP addresses. It is the direction and the rate of change that matters. The internet grew at 76% a year and then started flattening down to about 43% a year. That's very typical of network adoption models. Crypto has been growing at twice the speed of the internet. We will have 1 billion active wallets, and we can proxy that for active users. Yes, there's less active users. I get it. Doesn't matter. Don't get caught on mid-curving it. What it's saying is it's growing twice the speed of the internet. This is the fastest growing technology in all human history up until AI, which is dwarfing it already. But the difference between AI and crypto is you can't own crypto. You can't own AI very easily. And you couldn't own the internet. But here, you're getting a token in the infrastructure layer of the entire new internet.
Paul also sparked discussion after sharing his thesis on the current market cycle. According to him, Ethereum is expected to outperform Bitcoin, while Solana could eclipse it, and SUI could even surpass it, thanks to its adoption curve. This perspective, which considers blockchain growth through an S-shaped model, implies that newer networks like Solana and Sui have more room to grow relative to their size. Paul believes that Bitcoin's cycle has shifted and that the next market peak won't arrive until mid-2026. He questions the idea that halvings dictate Bitcoin's trajectory. Instead, he argues that cryptocurrency is tied to the global economic cycle, using the U.S. Institute for Supply Management ISM index as a guide. The ISM has remained below 50 for much of the past 3 years, indicating an economic contraction. This unusually prolonged decline, Paul explains, has significantly impacted risk assets, including Bitcoin. Bitcoin has mirrored this lag. Despite some moments of momentum, Paul points out that the global economy has not yet entered a true expansion phase and that the cryptocurrency market reflects this reality. His forecast now indicates that the second quarter of 2026 will be the most favorable period for another explosive rally. For Paul, Bitcoin is still cyclical, but things have changed. Patience, rather than waiting for an imminent rally in 2025, could be the key for investors this time round. Raoul Pal believes that by 2030, 4 billion people worldwide could be using cryptocurrencies. This prediction illustrates how digital assets and blockchain technology could change the world. Paul is optimistic as the technology is becoming more rapidly adopted and cryptocurrencies are becoming more widespread in the traditional financial institutions. This prediction isn't just an assumption, it's part of the rapid growth already being seen in the cryptocurrency sector. In 2021, approximately 300 million people worldwide used cryptocurrencies. This number has since increased significantly. Paul foresees a future where nearly half of the global population will be using cryptocurrencies. This is because blockchain technology improves transaction management, simplifies interfaces, and clarifies rules. Paul has a positive outlook for several reasons. Many large companies, such as Tesla and PayPal, have begun using cryptocurrencies, and an increasing number of traditional banks are also offering cryptocurrency-related services. This institutional support builds trust among mainstream users, further accelerating their adoption. Technological advancements are also significant. Layer 2 solutions such as Ethereum, rollups, and Bitcoin's Lightning Network address scalability issues, making transactions faster and cheaper. These changes improve the user experience, making cryptocurrencies more useful in everyday life. Paul's prediction shows a world where cryptocurrencies will no longer be just a small part of the financial world, but a key part of it. He estimates that by 2030, cryptocurrencies will be as common as social media, with uses ranging from payments to decentralized governance. This shift could transform economies, empower citizens, and transform wealth distribution. Reaching 4 billion users will require the efforts of inventors, regulators, and communities. While there are still challenges to be addressed, the current use of cryptocurrencies demonstrates that Paul's vision is achievable. As blockchain technology advances, it will likely connect billions of people to a decentralized financial system. This could usher in a new era for the global economy.